Daily with the Prince of Peace, Christ Jesus.
Ramsey Show ending. And here, Dr. D.
Hey, it's John Deloney, co-host of The Ramsey Show. Did you know over 18 million people listen to The Ramsey Show every week? A lot of those people listen on one of our 600 plus radio stations across the country. To find a station near you, go to RamseySolutions.com/show.
And after your beginning. All right. Guy in the Ramsey Show chat might be house poor. $2,248 a month. Alrighty, so yeah, that's too much. What up, Oh, let's see. Let me give you some Rachel Cruz song while I put in the links in the chat. What up, Sid? You go. Guess that's why we all watch Rachel Cruz. Guess that's why we all watch Rachel Cruz. Mentioning Winston, mentioning Target. Guess that's why we all watch Rachel Cruz. Mentioning Winston, mentioning Target. Guess that's why we all love Rachel Cruz. All right. Almost got done, but not quite. Whoops. The correct thing in. Let's coach the money. All right. Episode, I think, 2. Let's see what we got here. 240, I think. Is that it today? Yes, 240 today. Under the weather yesterday, so I didn't do it. And of course, yeah, guys, I don't know what's up with that financial coach calling. I don't want to say anything in the Ramsey Show chat, but the dude was a little too chill and laughing. Of course, it could have been nervousness, but if you went through the coach training, you would have a better handle on that kind of stuff. And being in baby step 2 that he was still in. Also might have been on the reefer, it sounded like, maybe. So anyway, it just sounded a little weird. So maybe a troll call. Who knows? Who knows? Let's sing some songs here. Where's my yep, still, in case you're wondering, still do not have an engineer or producer or anybody to push buttons for me. Not bitter though. Listen for the drum taps. Like all plans, it starts with step 1. $1,000 emergency fund. Step 2, you'll pay off all your debt. Except mortgage, we don't do that yet. So pay off your consumer debt. Every one of the charges, from smallest to largest. Maybe step 3 is next. full emergency fund of expenses. Stay gazelle intensive. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I coach, that's why I coach, and why I host this after show. If you don't like results you're getting now, you should do the baby steps. And if you want to have financial peace, then you should do Dave's baby steps. Step 4 is when you can take a breath and go less gazelle and invest. Step 5 is to save for your kids. No student loans at all for college. 6 is to pay off your home. Step 7, build your wealth and don't keep it all yourself. And you've lived like nobody else. And now you get to live large, and now you get to give large. His name is Dave Ramsey, and this is his plan. I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I coach, and why I host this after show. If you don't like results that you're getting now, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Trumpet home. Live from Columbus, OH. It's the Ramsey Show Aftershow show. Here we talk about the Ramsey Show YouTube chat, and the people in it, and all things financial, and whatever else I want to talk about. I'm your host, Coach Steve Money. I'm a certified Ramsey Solutions financial coach. You can schedule a free financial consultation assessment with me at calendly.com/Coach Steve Money. Link is at the top of the chat and in the video description. You can email me about anything. Yes, anything. CoachSteveMoney@gmail.com, especially if you would like to sing the Baby Step song, either by pre-recorded or live. We can do it live. What's another way you can get in touch with me? Probably like this.
Add me on the ground.
You can add me on the Grump at Coach Steve Money. No spaces. And if you'd like to donate to the channel so I can make it better, that's paypal.me/Coach Steve Money. Alrighty, Ob's pressing the button there. And thanks for the IO. Much appreciated. Yeah, I don't know what's up with that. What's up with that? Ooh-wee. Y'all know Kenan Thompson from Saturday Night Live? All right. Oh, what else do we have today? We have the new episode of The Ramsey Show. And today's hosts were Dave Ramsey and friend of the After Show, author of Redefining Anxiety, author of the new book. I again forgot to write that book down. Own Your Past, Do Something With Your Future, something like that. Ooh, we call him Dr. G, as you can see. But his parents named him John Deloney. Ooh, he's got 2 PhDs, 2 more than me. Plus, he's got some other certs. John Deloney, never gonna stop. Gives advice, such a brilliant mind. He always puts it as the craft of the healing kind. John, woo! John Deloney. Oh, he takes a call and then he twirls his pen and he saves the day again. John Deloney. Oh, this dude has got some range. Season of change is what you going through, says John Deloney. Never gonna stop, gives advice. Such a brilliant find, he always sorts it out. Has the clout of the healing kind. John, 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 John. Woo! John Deloney. Shape. Ooh, I said a brilliant month. Anxiety redefined and put in a quick read by John Deloney. Wealth and nowness, that's the face they didn't place, but they probably still had fun with John Deloney. Never gonna stop, gives advice. Such a brilliant find, he always sorts it out. Has the top of the healing kind. John, 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 woo! John Deloney. John Deloney. John Deloney. John Deloney. John Deloney. Market report. Alrighty, as you can see, the market all up today. Matty Bags tax refund will allow him to pay off the student loans. Excellent. Now, Matty Bags, you know that's way too much tax return to get. So you may want to look into whether that's, I know it might be different if you're filing jointly, but you may want to look into that and not have them hold out as much tax. Because you can do better with your money during the year than by letting the government borrow it tax-free, interest-free. Letting the government borrow it interest-free and then giving it back to you at the end of the year. Yep. As it said, adjust withholdings. LOL. Exactamundo. All right, so we got NASDAQ up. NASDAQ up, kids. So we know who's almost certainly gonna win the managed mutual funds for today. You know, we'll find out in the morning when we check with the other kids. Troy and his boomer funds aren't gonna hit it. Kelly did manage to beat me out one time, and so did AJ this month, but the S&P and the Russell small cap index were much closer to the NASDAQ when they could do that. So we'll see how that goes. The lowest, the Dow Jones Industrial Average, which is the total market index, and that is a 0.74%. So 0.75% up, and that's still good. That's a nice good average day. That's what it should be, instead of all the downturn as of late. And so we'll see if that holds up. And from what I can tell, let's see if that's a I don't think there's not a story listed right now, but earlier today it was a story listed, and yesterday it said that because the Fed chairman said, "Oh, we're gonna have to be more aggressive on the inflation that stocks went down. And then today there was a story linked that said, because the Fed chairman said we're going to be more aggressive on inflation, that's why stocks went up this morning. So, don't know. And both of those could be true. They may have freaked out about it yesterday when they first heard about it, and then maybe the traders thought, oh, well, maybe that's a good idea, or it just got low enough where which apparently it didn't. It opened above yesterday's closing. It opened above that, so apparently before the open this morning in the early hour trading, in the pre-market trading, they decided, well, it's low enough. We'll just buy, regardless of what there it is. That's what we were looking for. Let's see if it has some kind of explanation that is logical. Probably not going to happen. The rise comes a day after Jerome Powell said the Fed is prepared to move more aggressive. Alrighty. Alright, let's do the ad blocker thing. We'll turn it off on this page only. Alright. Rise comes a day, Fed prepared to move more aggressively in raising rates. Boom, 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 boom. So why did it go down yesterday, though, after he said that? Because an article yesterday said that exact same thing, and said that's why it went down. So I don't know if I'm gonna be able to deal with this if it's not logical. I'm kidding, of course. It's not logical. It's the market, so it's whatever they feel like they need to do at some given point. Even if, and they know this already, even if they're afraid the market might do something, so they make moves, and based on the moves that they make, it makes the market do something that they were afraid that would happen. And so if they didn't make those moves, it wouldn't have happened. So anyway, they know that already. They're smart people on there, I hope. Let's see what we got. Everything up in Europe. Everything up in Asia. Currencies. Euro up on the dollar. Dollar up on the Japanese yen. The British pound, love. Hello, love. Up on the US dollar. The Canadian dollar up on the US dollar. Sorry. And the Australian dollar, mate, up on the US dollar. Pals and crypto. Everything except XRP is up. AJ will be happy. Is Cardano up 5.91%. We didn't check the earnings calendar. We got Adobe should have already reported. Let's see what we got on that. And it went way down, so they must have got bad earnings reports, but then it came back up, and now it's still down from where it closed. Let's see what it says. Lackluster forecast suggests growing competition. Yeah, for the PDFs and such, other companies are doing that. Let's see. We got Neo on the 24th next week. Xpeng, Lululemon Athletica, Micron Technology, and on the 31st, Walgreens Boots Alliance. Most followed single stocks on the Google, probably. Yeah, Tesla up 7.91%. So, yep. Earlier in the day, I looked at it. It was doing about a little less than 4%. But anything above 3 is going to be normal, up or down for the Tesla. Artist formerly known as Facebook, Meta Platforms, 2.44% up. Google owner Alphabet, 2.77% up. And so, but as you can see, it's all up there. And what did I read this morning? I read that Apple is worth 11 Disneys. So, Apple Corporation, worth 7 Disney Corporation. Alrighty, let's see what we got. Stock future steady as investors juggle Fed comments and policy. Yeah, I guess that's that juggling that they were doing, because when they first heard about it, they were like, oh, no, that's too heavy. And so we better sell. But then they slept on it overnight and said, oh, I'm going to buy when I wake up in the morning. And so it went up today. So, all right, this from CNBC. Mortgage rates are surging faster than expected, prompting economists to lower their home sales forecasts. Key points: average rate on the popular 30-year fixed mortgage hits 4.72 on Tuesday, moving 26 basis points higher since just Friday, according to the Mortgage News Daily. All right. Let me ask you this. Do we do the 30-year fixed mortgage? We do not. That lowers your payment, letting you be more apt to go house poor, like my boy at the end on the Ramsey Show chat. We do the 15-year. Payment should be 25%. 25% of your net pay on a 15-year fixed. As a result of the recent spike in rates, economists are now lowering their home sales forecast for this year. I'm surprised they haven't done that already. Most estimates at the end of last year had the average 30-year mortgage rate hitting 4.5 by the end of 2022, but the war in Ukraine, rising oil prices, and inflation all have lit a fire under interest rates. How about that? Excuse me. Think we need anything in here. And again, they don't have the nice little chart where it's not a chart, but it was like a kind of like a key point thing where it showed each of the 30-year and the 15. Oh, let's see if I can find the 15 in here. If it says. It may not. Does not look like it does say the amount of the 15 or the 10, which I believe is normally listed. Alrighty, so let's see. As far as how you adjust your withholdings, if you are getting a big refund, again, you don't want the government to hold on to your money all year and then give it to you at tax refund time. You would rather have that money throughout the year, because you can definitely do better with it than the government can. Definitely, you can take care of your financial stuff. You can apply that extra money each month to whatever baby step you're on. And so that is much better for you than getting it all at one time in your tax return. And Sid says you check your pay stub software at work and you look for a W-4 form. And if you can't do that, you can ask your HR person how to do that. On Yahoo Finance, as we pause that, here's what Warren Buffett is reminding everyone about investing. So I don't know if these are old quotes or if he's saying something. Let's see. Channeling one of his long-held investing philosophies in his recent flurry of buzzy deals, says one fellow value-focused investor. That is to be greedy when others in the market are fearful. I think he's reminding us that when the tide goes out, we see who has been swimming. 91-year-old billionaire investor released Monday that his Berkshire Hathaway will spend $11.6 billion to buy insurance company Allegheny. The deal will expand Buffett's insurance empire further beyond auto insurance player Geico and reinsurance beast Genre, the General Reinsurance Corporation. Never heard of that. Allegheny hauled in more than $12 billion in sales last year and $1.1 billion in net earnings. That's a little chunk of change there. All right. So Buffett scooped up another 18.1 million shares of Occidental. That's petroleum. So that's oil. Berkshire Hathaway owns 14.6% of Occidental Petroleum now. All right, so it's basically for the average person, I think this would translate into keep buying stuff because it's on sale, and the Ramsey advice would be to keep investing on schedule even though it's down. It's been up the past 2 weeks. It's been up in general, but still way down from the high back in December. So still on sale. And why don't we take a look at that? Let's use the S&P 500 for that. Let's look at the 5-year. The 5-year. Okay, so this is going along here. This is the panty crash right here. Okay. A lot of people sold. After it dropped that much, they said, oh no, I'm losing all my money. And they sold. And when they sold, that means they lost all of this money. Now, my account went down this much too. I kept buying. I didn't lose any money. In fact, made money from buying this low. And so kept buying all the way up into here. And of course, as I said, S&P 500, December 1st, 2021, it was at the high. And which is about $200. Oh, no, 4,766. $255. $255 share, I think, difference there. So still has some coming back up to do, but as you can see, it's just working on it. So we'll see how it goes, because we still got the inflation, we still got the Ukraine. Still got supply line stuff going on, but we'll see here. Maybe some of those companies that are reporting will have good news, and they'll help the market go up. This also from Yahoo Finance. Panera enters the chicken sandwich competition after 2 years in the making. It took 2 years. Officially entered the chicken sandwich competition, I guess, since they're talking about Chick-fil-A's obviously had one a long time. Popeyes came out with one. I think a couple other places have come out with new ones, like in the past year or something. Anyway, March 30th, Chef's chicken sandwiches will be available at Panera locations nationwide and via the company's app. Diners will have 2 options: the signature take and the spicy take. That's normal. They give you a chance whether you want the spicy chicken or not. Both include a 1/4 pound of all-weight meat chicken, breast fillet, marinated and seasoned with the chain's spice blend. Each fillet is topped with a crunchy topping. Signature version includes Parmesan crisps and topped with greens on a brioche roll. Spicy take features crispy pickled chips along with side garlic aioli. I don't know how to pronounce that. And topped with a buffalo sauce. The sandwiches began at $10.99. I mean, you get your Parmesan crisp with it. I don't know if you get a drink with it, but $10.99. Oh my goodness. And is that going to be better than Chick-fil-A, dog? I don't know. Oh, let's see. Matt Daniels says it's good to plan ahead and get out of debt with these uncertain times. Lay low until the market cools. False. You keep buying no matter what. If the market's down or if it's up, you keep buying on schedule. If you're talking about the stock market. If you're talking about the housing market, probably, yeah, you do want to chill. But But if you have the money, go ahead and buy. Just make sure you can afford the mortgage payment. You know, pay it all in cash, obviously, if you can. If you can't, make sure you can put that at least for a first-time home buyer 10% down. And again, 15-year fixed mortgage payment has to be 25% or less of your net income. What gets above that could be house poor. Like my boy was at the end of the Ramsey chat. What was that? He was bringing home 65, I think. And his house payment was like $2,300, I believe. So yeah, that might be a little much. Well, let's go ahead and find out. Let me do the calculator. You guys are only looking at the browser window, so you can't see the calculator, but that's all right. I will tell you what it says. $65,000 times 0.25 equals 16,250 divided by 12 equals, yeah, that's $1,354. So he's paying about $1,000 more. I think he said his wife makes some money in addition, I believe, but that's still not gonna take it up to where that's gonna fit into. That's still gonna be over Dave's things, and that's probably gonna be up. He might be even up above 35%. Oh, so make sure you're doing that. 15%. It has to be 25% of your take-home pay. Whatever the payment is on a 15-year fixed mortgage. If you don't do that, you're likely going to be house poor, and then you can't attack steps 4, 5, and 6, which are you have to invest 15%. So you invest 15%, and then 25, or in his case, probably 35%. So that's 50% to investing and the house payment. And then you would still have to do kids' college, pay for all the rest of your expenses, and then put extra to the house to get that paid off. And so he may not be able to put any extra to his payoff to his house, and therefore, until he gets school taken care of for the kids, if any, then he can't put much down on the house. So house poor. This is from CNBC. Probably going to disagree with this, but odds are you're better buying an index fund. Here's why. Let's find out why. About 80% of all active managed U.S. stock mutual funds underperformed in 2021, according to S&P Dow Jones indices. And of course, if we look, let's go back and look at it to make sure that all that was uptime, which I believe it was. Let's see. Let's do the 5 years so we can see it all. So, in 2021. Yeah, that went up the whole time. So, I mean, you have your dips where it went down some. But, okay, so that did go. Market in general went up the whole time. Let's check the Dow Jones. Make sure 2021, 2022. Yep, last day of the year was when the Dow Jones was the highest. And the NASDAQ might be a little problem with that. Yeah, NASDAQ started coming down before the end of the year. And so that probably took care of some large cap mutual funds that knocked them down, and that's why the S&P beat the NASDAQ for the first time in 5 years. So NASDAQ beat the S&P for the previous 4 years, but then last year the S&P beat the NASDAQ again. Yeah. So, and this is saying 80% of all actively managed U.S. stock mutual funds underperformed in 2021, according to S&P Dow Jones Indices. Right, and so Dave says it's normally 40% of active managed U.S. stock mutual funds. 40% of them can beat the index. So obviously you got to pick the right ones. You may have to change them out from time to time because it might not be the same one that does that for 30 years. So you do have to do some extra work rather than just throwing it in a S&P 500 index fund and forgetting about it for the rest of your life. So, but that can make more. Let's see. The trend is similar for actively managed stock and bond funds over longer periods of time, according to Morningstar. Foreign stock, real estate, and bond funds generally had the highest success rates. Investors who buy active funds can improve their odds of success by focusing on lower costs. All right, so let's see. What does it say about... Active managers didn't fare last year. Yeah, because you saw the index drop off in the last month. The Nasdaq drop up and so that's your Apple, that's your Facebook, that's your Amazon, that's your Tesla. So that's all that. Google, that's all that in there. And so that went down in the last month or so. And so that took it under the S&P 500. So for last year, it was, but they said for long term. So I'm looking for proof of that, and I'm not seeing any extra mention of that so far. Let's see. It was really quite exceptionally bad. It wasn't that bad. Let's see, just for bond. Oh, they're talking about bonds. Dave Ramsey does not recommend bonds at all because they are not good investments at all. They don't beat anything. So that's why in your target date funds, as you get older, it goes more into bonds. There's more guaranteed, but it's a low rate. Like it's more likely it won't go down, but the interest it will be making is not that much, or the rate of return rather. Talking about the fees. Yeah, so they put it in the title, but I don't see anything in here about it saying over a longer term. Which is the trend is similar for actively managed stock and bond funds over long periods of time. Oh, I see. If it so if it has stocks and bonds in it, I see. And so that's what they were talking about, the 10 to 15 year thing down there. Okay. So they weren't talking about like regular managed funds. They're talking about ones that have stocks and bonds in them. So, alrighty. What we got from the NFL? The NFL, this one also from CNBC. The NFL will now let teams seek limited blockchain sponsorships, but cryptocurrency promotion remains banned. So basically, the blockchain is the technology the cryptocurrency is built on, but so you can promote and invest in blockchain technology without directly promoting a cryptocurrency like Bitcoin or Ethereum or something like that. So NFL granted teams limited permission to seek blockchain. Almost was clucking like a chicken there. Blockchain sponsorship, the bans on cryptocurrency promotions and fan tokens remain in place for now. So that's going to be your NFTs, non-fungible tokens. The permissions, which are subject to the NFL's approval, exclude stadium signage. Restrictions remain in place for cryptocurrency and fan tokens. The league's decision also comes after a recent federal lobbying push related to blockchain. All right. I think that's probably all we need for that. Boom, 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 boom. And we got, let's see, from Yahoo Finance, NVIDIA teams up with Lucid and BYD for new self-driving platform. So I don't know if they need to be getting into the self-driving platform. It seems like a bunch of different companies are getting into that. You know, they could just make video cards and other things like that, servers, etc., etc. But I guess they're doing a self-driving car too, so we'll see how that works out. A whole bunch of different technology companies are doing their own self-driving car. Let's see what we got in trending. Starbucks Cafe in hometown Seattle votes to unionize. All right. Panera, we did that one. Streaming wars, hyper personalization is the big difference, analyst says. Yep, I guess if it knows exactly what you like and says, here, watch this, you're more likely to watch it and more likely to not turn the streaming off and keep watching it. Adobe earnings beat estimates, though, but the stock falls after hours because it did say their forecast is lower because of competition, but their earnings beat estimates. What do you want? Fed officials backpedal over hikes with half point on the table. So it did go up last week at 0.25%. And now the next rate they're talking about, I don't know when they're talking about doing that, but maybe next month, maybe half a point. So we'll see. And that's supposed to get rid of that nasty inflation that we all don't like. Alrighty, so let's do a couple of Reddit questions. Or, let's see. This from Southern Scene 4495. It's never too late, I hope. If you breathe, it's not too late. Any others with a very late start here? "27 months ago, at the ages of 58, me and 58 her had our oh crap moment." Yeah, that isn't that early in life to have that oh crap moment, and you hope that happens earlier, but it didn't. So, $250K in total debt with the house. $137K of consumer debt, $120K, which was parent plus student loans. We're lucky to have about $200K in retirement, I guess, but still not a pretty picture. Then we found Dave Ramsey. Yelp. I mean, you would hope that something would kick in earlier. Let's see if they say exactly what happened. Doesn't look like it. Nope, didn't look like it. They don't say exactly what happened to make them have their oh crap moment, but you would think with the $137K of consumer debt, and well, which all, 120K parent plus loan, so that means they signed for their kid to go to college, and it looks like they're going to pay it all. Looks like they don't say the kid has to pay any of it. So and so that's not that bad if you discount that, which you can't. But if you were to discount it, that would be only $17,000 of consumer debt. So like credit cards, loans, small loan for something, and so that's $17,000. So, but 137 in that, and whatever else you have to add to that to get for a grand total, including the house, $252K. And so, did it happen when it went up to $250K? I mean, it could happen $25,000 earlier, but it didn't. So, alrighty. So, After 27 months, we're down to just the mortgage. Oh, which is 102K. Oh, great. Oh, they paid it? Oh, they paid it after 27 months. So that is, let's see, that is 24 is 2 years and 3 months. I did the math in my head. Proud of me. So 2 years and 3 months, they're down to just the mortgage. They paid off $137,000 in 2 years and 3 months. Excellent. So just the more, and a bunch of the mortgage too, I think. Let's see. 137, that's 100, paid like maybe 40 something on the house. Cool. Income combined runs about 160K. Well, there you go. So that big shovel will help you when you discover Dave late. Absolutely. When we seem to be able to put away about 5K a month, including the 500 that comes off the mortgage principal. And yes, we do have an emergency fund of about 30K. Might be excessive. Now the question is, do we just do 15% to retirement and slam the mortgage, which is at 3.4%? Yes. Can we even get to a reasonable nest egg? Maybe not, but you'd have a paid-for house. You want to have a paid-for house. That way you don't have a mortgage later, and that makes your life way easier. But let me do the math again on that. And I mean, we don't know where they live. We don't know cost of living, which of course is not our fault to give them a pass on that, but it will help explain. What did we say? 160K. I'm going to assume that's take-home pay. And they're doing 5K a month on that. Okay, so we want to see divided by 12 is, so that's 13,000 a month. So yeah, about 5,000. So that means they have 8,000 a month that they are. Let's see. So the mortgage has a 500 for principal. So like the total might be like twice that, then 1,000, or maybe I mean at most it would be 1,500. So trying to figure out what doesn't say what the house is worth. Doesn't say what the house is worth, but it seems like they might have some lifestyle stuff in there and could possibly do a little bit better than 5K. But I guess that's all right. If you make 13 and you have 8 in expenses, not including mortgage. Yeah, just put all that into the mortgage then, and get out of that mortgage before you retire. So yeah, just do 15 while you're still paying off the mortgage. So I'm sure people that come are, let's see, there's 2 comments, so let's check them. See if someone said Yeah, so they're saying to do the math to figure out which one, but I'm not saying that. Max out all retirement accounts. Yeah, I'm not saying it. Pay off your house, then you don't have a house payment, and that will be better in retirement than whatever you could possibly make in investing. So because that is not guaranteed. Having to pay the house payment is, unless you have the house paid off. At least one more. Feeling less motivated. This is Ethan 71155, feeling less motivated in baby steps 4, 5, and 6. Don't know if anyone else feels this way. That can happen. And you, because you're not as gazelle intense and your situation isn't as desperate, because you do have a 3 to 6 month emergency fund, 3 to 6 months of your expenses in emergency fund, and so you may not feel as intense even if you're still working a lot. But yeah, 4, 5, and when you're doing 4, 5, and 6, those you don't really see any. You don't see a thing. You don't have generally a chart on the fridge showing how fast you're paying off debt or socking away that emergency fund. You don't see that. Step 4, you're putting 15% to retirement investing, and you don't so you don't really see that. I mean, if you go searching for it, you could see it, and you could put all this on the fridge, what you're still doing. But a lot of people probably don't do that, and so it's just you got to remember that that's what's happening with that money. So let's see what's going on. Single 23 male, net worth of 50K, only debt, just a baby. So plenty of time to make money in the market for retirement. So just fine. 23 male, just fine. Only debt I have is my house. Oh, I already bought a house. So there you go. Breakdown net worth, 10K cash, 20,000 stocks, 20,000 home equity. All right. Net worth of 0 in August 2020. Saved roughly $1,500 a month and got lucky on some investments since then. I'm at a point in my life where I feel financially stable. Lifestyle won't really change until I retire. Okay, which is all in the distant future. You don't know that. You can't say that at 23. But all right, honestly, life seems simpler on baby steps 1 and 3 because they were obvious and didn't take much time to complete. Right. My next this is the now you're in the long game. My next step is baby step 7 after you finish 4, 5, and 6. But even that won't change my lifestyle much. You think? Because I'm feeling a little directionless in life. How much should I prioritize money? Anyone feel like this? You should prioritize it the same amount you did before, but you don't have to be as gazelle intense as the way you attack it. Like if you were doing side hustles and stuff, you may not need to do that kind of thing, but you should still put the same amount of thought into it. Of course, Dave Ramsey does not recommend single stocks, so you could cash out those single stocks if they are not in a retirement account, and you could put that on your house. But yeah, that's it. And if you a single 23 male, if you don't have a baby, you're not doing 5. So there you go. 15 comments on that. And so I'm sure they took care of them. Some people giving him bad advice and some people giving him good advice. All right, and finally we have paid off the house. All right, this from Cocoa Butter 456. Cut to the chase. About a week ago, my wife and I became weird people, looking at weird people in the Reddit. Paid our 15-year mortgage, excellent, in a little less than 4 years. As for where we're going from here, we're talking about having a second child approved. And should the second child arrive, the thought of saving for college and all the other expenses that come with children do not stress us out at all, right? Shouldn't. No mortgage payment. Got plenty of second child payment to happen. So it's only been a little bit, but it really is true that food tastes that much better knowing you will never have to make a payment again. Not to mention, I feel like I'm going to work every day for fun now. Well, I don't know if you're quite like there or not to where you could just quit, but yeah, I mean, without a mortgage payment, that's a lot of extra things you can do other stuff with. Like you can invest some of it, you can give some of it away, you can spend some of it, have some fun. Not one we're going to brag to our friends and family about, right? They don't understand, they're normal people. But wanted to get in a Reddit soapbox and shout it out. Excellent. Alrighty. Let's see. What is tonight? Tonight is Tuesday. Oh, let's see. We'll see how I feel by the time I'm getting home. I may do the tech support with Coach Steve Money. That I missed last night because I was sick. May do that tonight. Tech support with Coach Steve Money. Basically, I just go to the tech support Reddit instead of the Dave Ramsey Reddit and do just what I did before and talk about tech support, comment on those, and answer questions on those with my 25 plus years of PC tech experience. Of course, we got this show Monday through Friday, except when I was sick yesterday. 6 p.m. Eastern Time, right after the Ramsey Show on YouTube ends, the YouTube video. Wednesdays, no set time, the Curse of Oak Island no cap recap, and that will be up. I uploaded the Beyond Oak Island no cap recap this morning from last week, and there will be a new episode of Curse of Oak Island tonight. And so I will recap that thing early in the morning. And normally I get those up about 6 a.m. But it's whenever I can get it done, basically. And that's a pre-recorded. That's not a live stream for that. Wednesdays and Saturdays, 8 p.m. Eastern Time, Old Man Video Gaming. I did some wandering around in the game In Sound Mind. And I did find what I was stuck on. I found the solution to that. But I didn't do it yet. So I was going to save it for the next stream of that, and that will be tomorrow, unless I feel like doing that tonight instead or in addition to. I don't know. I probably won't. Probably will just do, if anything, I'll just do tech support with Coach Steve Money tonight and go to bed. Still tired from being sick. And then tomorrow night do that, play some more of that. And that game In Sound Mind is free on Epic Gaming. Or no, not Epic Games. EpicGames.com/store. And that game is called In Sound Mind. And they have a free game every week. Sometimes more than one. But usually it's one game free. And that's the game this week. Until Thursday morning, 11 a.m. Eastern Time. And then it changes to an occult pinball game. So that might be fun as well. Another game that's on sale is Madden NFL 22, and that is 49 cents on the CD Keys website. And that does activate on Origin. And that is for PC. The console game still costs more. What else we got? Let's see if we got another subscriber here during the show. And we did not, but we didn't lose one either. So that's a good day. All right. So you can, if you have money problems, or if you just want to make sure you're on the right track, schedule a free consultation with me. I'm a Ramsey Solutions certified financial coach. And you can click the link in the chat, at the top of the chat, or in the video description below, or on my YouTube banner on the main page right here, where it says schedule free consultation, and that'll take you to calendly.com, and you click on financial coaching consultation, and then you click on the day. You can change the month if you want to. Already talking about May the 4th be with you even. I'll even do it with you on that day, even though that's a national holiday. And you click on that, and then you pick the time, and Calendly will let me know when you would like that appointment. And I will email you back and let you know what information I need to accurately assess you. This P right here is for the PayPal donations, which is right here, bottom of the webcam frame. Also in the video description and at the top of the chat, paypal.me/Coach Steve Money. Any donations, any amount, gladly accepted. Much appreciated. Instagram, add me on a girl. Is Coach Steve Money, no spaces. And you email me at coachstevemoney@gmail.com about anything that's on my YouTube channel, about anything about financial coaching, any questions you have at all. Be more than happy to chat with you through email. And especially if you would like to sing the Baby Steps song, I would love to hear somebody else sing it. Why is that doing that? Oh, because I was over the profile picture. Alrighty, so that's it for today. Everybody have a wonderful night and make smart financial decisions.